Hey folks, hope everybody's doing great. Let's go over some of the market events today. First of all, the dollar is going down. I told you that the dollar is going to head lower. It is in a long-term downtrend based on fiscal policy, based on monetary policy, and based on foreign policy, or I would call geopolitical strategy of the United States. I've been over that on a number of occasions, talking about how the U.S. government, the current administration, prior administrations, I guess starting really with Obama, the weaponization of the dollar, but now it has really accelerated and taken on a whole new aggressive form. Okay, the United States government is not hesitant whatsoever in using the dollar and the global dollar-based transaction and clearing system as a weapon against any country that it deems to be an adversary, or just simply not following the directives of Washington. Okay. Now, I said before that the rest of the world does not want to leave the dollar, but they are getting hip to the fact that there is too much risk now, and you're starting to see unilateral arrangements being, I should say bilateral arrangements being formed, for example, between Russia and China, Venezuela not accepting dollars or accepting Chinese yuan or ruble for payment of oil, etc. So this is the slow first beginnings of I guess you would call it the beginning of the end of the dollar as reserve currency. It's a whole separate video, or it is a series of videos to cover that. The other things are obviously fiscal policy. We are seeing a very significant expansion in federal government spending. We are on track to have a new record high this year, surpassing the 2009 stimulus high. All right, that's printing money. That's the real printing money. You don't see or you don't hear all the quacks out there talking about that. They were focused wrongly on Fed policy when the Fed was conducting quantitative easing and 0% interest rates. That was not printing money. That was an asset swap, okay? And zero interest rate, that was a net drain on national income, okay? Because interest income is not an insignificant part of personal income. It is significant. So when you put the rates down to zero, and by the way, in my latest issue of MMT Trader, a graphical depiction of the sort of acceleration in interest on Treasury securities. Okay, this year already up 83% over same time last year. In other words, the amount of money that the government is paying out in the form of interest on those securities is up 83% year over year. That's printing money, okay? So nobody's talking about that, but we know it here at MMT Trader. We are ahead of everybody, okay? And of course, monetary policy, that is tied in with what I just talked about, because as the Fed raises interest rates eventually, and it has taken some time, I will tell you that we're first only now starting to see it flow through into higher interest payments. But as the Fed raises rates, that equates to a fiscal expansion. I just showed you. We're up 83% in terms of the interest being paid. And that flows to income, and not necessarily, it doesn't necessarily equate to higher output, just higher income, same amount of output. You get inflation, and we're seeing that. You saw the PPI, the Producer Price Index, up 0.4%. We're seeing bank deposit growth now at the highest rate in 2 years. All right? Printing money. Nobody's talking about that. That's printing money. They're printing money. They're printing money. You know, they're printing money. Yeah, they're printing money. So I'm talking about that. So the dollar is going down. Now, the other thing that's happening is we had the API oil inventory tonight. Last week, when it came out, I said there was going to be a build. There was a draw in the APIs, but I said there would still be a build in the EIA report, and there was. There was a build in crude. And I said for this week, we will see a build in the APIs to even out, because sometimes those two reports, the API report and the EIA report, they don't sync up week to week. But I said you'll see a build in the API report, you know, to bring it in line with what the EIA had. And sure enough, we had a build. But one thing in that report, distillates, the distillate inventories are at scary low levels, especially for this time of year. And distillate is not only heating oil, okay, which we use here in the Northeast primarily as a heating fuel. Rest of the country mostly uses natural gas. But it's also diesel fuel. So you have a very strong economy running upwards of 3%. If the tax cuts go through, you're going to see us over 4%. And you got low levels of distillate. I mean, that is a very, very explosive situation, potentially explosive situation. Now, of course, what happened? The zombies sold on the inventory report tonight. But I give specific instructions of what to do in an email that I sent out. If you want that email, as I always say, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Okay, everything will be in there. I will send you the emails. I do several updates every single day, talking about all kinds of stuff, from stocks, bonds, currencies, commodities, MMT, all the way through. Oh, I'm tired. Sorry. Only had 2 hours of sleep last night. Woke up. I went to sleep at 2 a.m., woke up at 4 a.m., went to the gym. All right, everybody. That's it for tonight. Sorry for the late video. I'll see everybody tomorrow. Take care. And don't forget to go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader. Bye.